definitely watching Business AM at Metropole Television, your 24/7 premier channel for business in Eastern Central Africa. We are glad that you have invested your time with us this morning. Now, you do know that we have a new finance bill 2020. Now, Yatani is saying that this is among the best in the world. That is according to him, not according to us. Now, it's upon us, therefore, to go and single out for you the areas which we think present a talking point to you in terms of the way in which you're going to run your business and in terms of the way you're going to get affected by the weight of the money in your pocket. All right, therefore, this morning, helping me put a proper telescope on those issues, we do have CPA Karaya Mokaya, all right, is a partner, and at Tax and Business Advisory Services, SKM Africa. Mr. Mokaya, thank you very much for joining us this morning.
Thank you very much for having me, Elijah.
And wait, the thing that I want to ask you, and I keep on asking everybody just before we even get into the gist of our business today, how is your business going through this COVID-19 pandemic?
Thanks, Elijah, and very good morning to our viewers. Indeed, I'm delighted to be here. It's a very interesting time to be in business, and I think across the globe there is more or less of mixed reaction, but the scale tends to tilt towards one side. Yes. That every business is towards the receiving end. We're seeing more and more businesses trying to cut down their cost. And one way they're trying to cut down their costs is they're trying to reduce their manpower. Yes. They're scaling down the manpower, and that means either salary cuts or job losses. Mm-hmm. And basically there is very reduced economic activity across the globe. Yes. In Kenya, for instance, we are not exporting as much as we used to do. There's not much business at all in the hospitality sector. We at consulting, with most people working from home, we are not able to do as much. Personally, I'm in the tax field. Yes. Our key stakeholder is the Kenya Revenue Authority, and our clients who we represent at the Kenya Revenue Authority. Yes. With Kenya Revenue Authority, literally, carrying the operations at half the scale, and with our clients, literally, working from home. That tells you how the picture is. There's not much activity at all. Yes. And that spells to the fact that there's very reduced revenues or income at this point in time. Mm-hmm. And it will be an interesting year, because we expect so many companies to be, to make huge losses, and those that are in profits to make very minuscule profits.
Yes, and that's what the conversation point is, isn't it? All right, now I know that you looked at the Finance Bill 2020, even during this time of the COVID-19 pandemic, and I did know that you did give a key focus on the tax measures under that. So therefore, before we begin this morning, can you tell me, what do you generally think about the Finance Bill 2020? Ukur Yatani is saying, the best in the world.
I mean, definitely that is expected sentiments of the government. Yes. They're definitely going to try to praise it and, make it look like it's very friendly to Mwananchi, to Wanjiku, yes. Yeah. But my view is quite different. To me, I look at this Finance Bill 2020 as a revenue mobilization tool, as a revenue mobilization vehicle for government. Yes. Of course, governments are not spared in this economic downturn. If we don't have enough money, if we are not getting income, then the government doesn't have taxes as well to collect. Yes. Yeah. But the reason why I'm calling it is more of a revenue mobilization tool or vehicle is because if you look at the introductions that have been brought about by this act, there are 4 key introductions. There's minimum service, there's minimum tax, which basically means that going forward, if this proposal comes, is enacted to law, companies which are making losses will be paying tax on their gross turnover. Yes. At 1%. So if indeed you are taxing companies which are making losses, and those companies are in losses for a particular reason, then it cannot really be the best finance bill in the world. Yes. Number 2, there is an introduction of digital service tax. Yes. Well, it's really a concern across the globe on how to tax digital transactions. Not even the best of the countries which are very sophisticated revenue collection methodologies have been able to bring this to the tax spectrum. Yes. But that said, the fact that we're trying to get into that space and get some revenue from that space tells us that we are in need of in dire need of revenue as a country. And what really, puts me off and makes me, to be quite of, in a different opinion from Yatani is the fact that there are more tax cuts in this finance bill than, we could have expected there to be an avenue for tax savings for Mwananchi.
Yes.
For example, what the law is proposing is senior citizens should be paying tax going forward.
Pretty much. And then I looked at that and I was like, wow, if you're saying it's going to be the best, and you're telling me that if I'm above 65 years old, then my pension is going to get...
Exactly. So, and it didn't even end there.
Yes.
There's the fact that corporates are now being, KRA is putting more focus on corporates. They're saying, look, we're going to cut a number of expenses which currently are deductible in determining your taxable profit. Going forward, the proposal is they should not be deductible. For example, and we shall look into it as we proceed.
Yes.
Club subscriptions, trade subscriptions to trade associations, entry fees and subscriptions, and these are proposals which were there in the Tax Laws Amendment Bill. They went to Parliament. Parliament, in their wisdom, rejected those provisions. Again, the National Treasury and KRA are introducing the same provisions to Parliament. And by the way, Mr. Elijah, there's a provision, there's one of the standing orders of the National Assembly, that is Standing Order 41, bars or, provides that a motion should not be tabled if it has not, been 6 months since it was last debated.
Yes.
Yeah, and it's barely a month. The Tax Laws Amendment Act was signed by the President on 25th of April. The Finance Bill 2020 was tabled in Parliament on the 6th of May. That is a time span of 10 days.
That's just 10 days, isn't it? And they're calling it the best that we have to offer. Good thing. Let's therefore look at those key areas that I want to ask you. And I want to start from a business perspective, because I know you give a key focus to business and how tax is going to affect them. Now, they're saying that they want to do away with presumptive tax completely, and therefore subject businesses that make a turnover of over 500,000 to 50 million shillings to just TOT.
Turnover tax.
Isn't it? I want to ask you though, what happened to presumptive tax, and do you think the TOT will be the magic bullet to unlocking the revenue woes for KRA?
Well, presumptive tax has been with us for just a year.
Yes.
It came in 2019, and slightly over a year, it's basically off.
Yes.
Because that was proposed by the Tax Laws Amendment Act 2020, which came into law on 25th of April 2020. And the interesting bit is the fact that where I sit, I'm normally of the view that, once we legislate some of these laws, we need to give them time before we assess whether they're productive or not.
Yes.
Because we can't be in the, in that mood of legislation all the time. We need to give space and time to some of these legislations, which then, we get a more objective way of assessing their success or their failure.
Yes.
For the case of the presumptive tax, despite the fact that it wasn't given enough time, I do feel it didn't really, achieve what it was expected or what it was targeted to achieve.
Yes.
First and foremost, remember, presumptive tax was based on the fact that county governments were to try and, coordinate and liaise with KRA to get this, complied with.
And that proposal failed when they realized that, well, counties are not on board with this plan.
Absolutely.
Yes.
And I'll give you a very good reason, perhaps, why most counties were not reading from the same page with the KRA.
Yes.
Most counties, by the way, perhaps are not very tax compliant. And what does KRA do? They assess these counties and issue them tax assessments. Some of these counties will never pay, or perhaps they never pay at all.
Yes.
So what does KRA do? They go to the exchequer, they tell the exchequer, before you disburse this allocation to this particular county,
They gotta pay.
please make sure you deduct this and send it to our KRA account.
Yes.
And once a county gets such a kind of notification that your exchequer disbursement has been deducted or reduced because of your tax assessment, then they're not going to cooperate with the KRA account.
Isn't it? You can't help me when you're biting me from the other side.
Exactly.
Yes.
But also in terms of initially, I think KRA's intention and the National Treasury's intention, the policymakers' intention was to try and ride on the database of county governments.
Yes.
To try and get information. Remember, we're in the information age, where information is the most powerful tool. Mm-hmm. And what KRA was keen on was trying to get information from county databases and then use that information going forward. Yes. To enforce compliance against taxpayers.
Yes.
But looks like the old policy was never well thought out, and perhaps why, it was just introduced and pulled back.
Yes. You started by mentioning that the Finance Bill 2020 would just look like a revenue collection tool for the government that realizes that we need to do more. But then it's ironic, therefore, when you have even an introduction of saving plans that don't get taxed at a time when the government has only one budget cycle left after the next one that we're getting into, therefore to deliver 500,000 affordable housing units to the economy. Do you think that is sort of counterproductive for them? Because if you're taxing my savings plan into homes, it pretty much means not many people want to do that at the end of the day.
Absolutely. And Elijah, remember, this provision was there in the Tax Laws Amendment Act.
Yes.
It went to Parliament.
Yes.
Parliament rejected it. And it's now being reintroduced to Parliament again through the Finance Bill 2020.
Yes.
The reason why Parliament rejected this provision was because it is at the cornerstone of the government's agenda. That is, the government's agenda to provide affordable housing to as many Kenyans as possible.
Yes.
And Parliament was saying, if indeed the government's agenda is to provide affordable housing, then how can we be, appealing or removing provisions which provide a framework to the accomplishment of that particular goal?
Accomplish that, isn't it?
Yeah. But I think the Revenue Authority's thinking is quite different. And
Yes.
I tend to agree with it, to be honest,
Yes.
for a very simple reason. Currently we have 3 avenues that sort of, facilitate taxpayers or Kenyans to get to acquire homes. So the first one is what you've just talked about, the home
savings plan, isn't it?
Yeah.
Yes.
The second one is the affordable housing contribution, which also comes up with an affordable housing relief. The third one is mortgage interest relief. Now, the affordable housing or home ownership savings plan, the relief that came with that was 108,000 in a year.
Yes.
So if you divide that by 12, that is really some very minuscule amount.
Yes.
It's not really as much. Yeah.
Yes.
Again, if you look at it from the uptake perspective, I'm in business, and I interact with my clients quite a lot. None of the employees of my clients are in this scheme at all. This scheme was put up, I think, in 1995, 1996, thereabouts.
Yes.
The home ownership savings plan.
Yes.
But the uptake ever since has been extremely low.
So what do you want to tax it?
No, because the government is saying we're doing a cleanup. You guys, we gave you this,
Yes.
Mwananchi, but you're not taking it up.
Yes.
And since there are other 2 more vehicles, or 2 more frameworks which you can, ride on,
Yes.
then let's remove this one. Because in the first place, it's not giving much output as it's expected.
Yes.
Yes.
Pretty much. All right, now I got to talk to you about this. Now, we do have corporate tax, which we do know now has been reduced to 30% to 25%. There's this thinking, therefore, SKM Mokaya, that this should stay in the long term, that this reduction of corporate tax from 30% to 25%, so that we draw in more investments into the country. We do know it's been taken as a measure, therefore, to cushion the economy from the effects of the COVID-19 pandemic. But do you share the same sentiment that it should be retained in the long term?
Well, the CS said that this is a
Yes.
long-term measure.
Yes.
He gave that assurance because everyone was quite concerned on whether is this a temporary measure which is trying to mitigate the effects of COVID-19, or once COVID-19 is contained and the economy is back to its feet,
Yes.
then we are going to repeal it. The CS said no, this is a long-term measure. Interestingly, my view is quite different. I tend to think that this is a very short-term measure. I tend to think this was in response to the COVID-19 effects.
Yes.
And already IMF is actually on our back. They're
Yes.
telling us that, look, you cannot be advancing such tax incentives to corporates and to people, basically.
Yes.
And the argument is very simple. You are eroding the tax base. You are reducing the tax base, which effectively means you are going to collect less. And getting, with the fact that our loans are already at 6 trillion, recently we did vote to increase our debt ceiling to 9 trillion.
Yes.
That the pressure we have of close to is it a billion shillings? Is it a trillion shillings of interest payments? That alone gives us too much pressure that we cannot afford to cut on tax revenues. And The reduction of the rate definitely fits the fact that we are going to reduce our tax revenue collections, which is not sustainable in the long run.
Yes.
I can tell you, Elijah, I'm not a prophet. I don't purport to be one. But I can tell you for
but
sure
you can
that
actually see that,
this
isn't
one
it?
is not likely to stay for so long.
Yes.
In fact, once we are back to, in terms of the economy is up and running,
yes,
and things are relatively manageable,
yes,
it's likely that the government
is going to be reversed on that, isn't it?
As soon as possible.
Yeah, the soonest possible. We did see IMF also warning us that we have to sort of go back to the older ways immediately. We feel like the effects of the COVID-19 pandemic are done. Is that a talking point as well?
Exactly, and
yes,
IMF is saying in the first place we should have really, advanced the tax, incentive
yes,
that
this tax incentives that we're talking about right now.
The government gave as a mitigation, as an indirect stimulus package to
Kenyans.
Yes. I think I agree with IMF because of one. Our population, 90% of our population, if not more than 90% of the population, they're not employed. So if, for example, you increase the tax bands from where they were before currently to 24,000 and above. So if you're earning less than 24,000, you don't pay a penny or in pay as you earn taxes.
Yes, yes.
But what percentage of our population are employed, formally employed? Extremely, extremely small. Majority of our Kenyans are in the informal sector. What stimulus package is available for the informal sector? And these are the guys who run this economy literally.
They would like to tell you it's VAT that has been reduced from 16% to 14%.
Now, the question of that is, I don't know how often you visit the supermarket shelves and get to be keen on the price reduction.
Yes.
I'm not saying there's not been price reduction.
Yes.
And it's better, and it's better that there should be price reduction. But the question is, again, is this even sustainable in the first place? Number one. Number two, as Mwananchi felt that that reduction in VAT, how much were you buying bread before?
50 thereof, isn't it?
But perhaps it could be exemplary related.
Yes.
But basically most products which are currently vatable might not have really gone, the price might not have gone down significantly.
Yes.
And perhaps because we're not being very honest and very sincere as business people, when we are getting this incentive from government, we might not pass them on to Mwananchi.
I see. All right, there's another talking point there for this morning, SKM Africa this morning. One is that if you are going to pay dividends to non-residents now, it will be way costlier for you. But talk to me from that perspective, that even when the finance bill is not going to state that it's going to be taxable, do you think that that is counterproductive as well for, therefore, these companies, therefore, admitting more non-resident investors who we need most post-COVID-19? Is it counterproductive?
It's definitely counterproductive.
Yes.
Elijah, it is definitely counterproductive. And, interestingly, I think the policymakers on this, they must have lost it, in my view. For a very simple reason. First and foremost, our stock exchange, our Nairobi Securities Exchange, majority of the trade volumes that are being run there are run by foreigners, foreign shareholders.
Yes.
Yeah. So to the extent that you are increasing withholding tax on dividends paid to foreign shareholders, then the biggest casualty is the Nairobi Securities Exchange.
Isn't it?
Yes.
And so for you, when you look at it like that, do you see, did they look and say, wow, where do we need to get more money from? Other than just the available or the existing frameworks, we need to go into the pools as well, just to get the foreigners who come to invest in the Kenyan market.
Absolutely.
Yes.
But again, with COVID-19 effects and the uncertainty around how long the effects are going to be with us,
yes,
how many companies are going to afford to pay to first be in profits? Because you need to be in profits for you to declare dividends.
Yes.
Yeah.
But we've seen others in the NSE 20 share index, just like NCBA the other day, they didn't actually pay full dividends. They just paid a bonus of as per the shares.
Absolutely,
yes,
absolutely. Because what most companies are right now trying to do is trying to put up contingency measures,
yes,
to try and see them survive the COVID-19 effects. And there's more or less of that, let's wait and see, and the attitude of let's wait and see how this, whole scenario is going to play out. And the increase of withholding tax for dividends paid to non-residents is definitely not a good thing.
Yes.
We depend on FDI
yes,
quite much, foreign direct investment, and these shareholders who are foreigners come in two ways. They either come in through equity investment, or they come in through loans.
Yes.
Yeah, shareholder loans, or just third-party loans. Now, if they come in through shareholder investment or equity investment,
yes,
then definitely they're going to be discouraged. and we are going to see less, and if they are going to consider that as a serious aspect for consideration in the investment decision, then we are going to see very little movement of capital from outside to Kenya in form of equity.
Isn't it? All right. Now,
and that is very impactful,
yes,
because then it means for companies which require funds for growth, for expansion, or even to deal with the COVID-19 effects to get back to their feet of operation,
yes,
then that is going to be a bit of strangled.
Pretty much. All right, my director tells me that we only have 2 minutes. There's so many talking points that I wanted to go on this, therefore. Now, as we clear this morning, talk to me now what your company is doing, therefore, in line with the new tax environment. What are your clients asking you to help them do?
I think the biggest more or less of service offerings right now to our clients is, yes, to enable them to stay tax compliant.
I see.
Because that is the easiest planning measure that a company can put in place.
Yes.
Because once you tax plan, then it means you don't pay a cent more, you don't pay a cent less, and which means that you're not exposed to penalties and interest.
Yes.
Should KRA come and look at your records and find that, for instance, you didn't pay the correct taxes or the fair taxes that you ought to have paid to the state.
Yes.
So for us now, every penny counts for our customers or for our clients, and we are trying to give them that value to ensure that there is no more of a payment of taxes or less. And by the way, I think it's very important to mention that with the expected reduced business activity across Kenya and across the globe,
yes,
what we are advising most clients to do is for 2020, they need to change their way of determining the installment taxes payable, so that there are 2 bases. There's current year base and there's prior year base.
Yes.
Prior year base is where you do 110% of your prior year tax liability to determine your current year tax liability. And current year basis is where you do a projection of your business performance, then use that to determine your tax liability for the year. So what we are telling most companies, because the prior year base assumes that you're going to grow by 10% in the current year, so you do 110% of your prior year tax liability, then you divide by 4 to get your installment taxes payable. We are telling most our clients, go current year, because it's expected that they're going to be a dip in business. So go current year, do a projection of our performance, and then pay taxes based on that, so that you don't pay an extra cent more, or you don't pay less, and you try to align your tax payable close to the tax liability that's going to be there at the end of the year.
Pretty much. I hope they're listening. All right, you want to get in touch with CPM Mokaya, you know what to do. 2146, or you can actually now pretty much go to SKM Africa, Nairobi, and then after that you pretty much get the information that you need, therefore, just to remain tax compliant in an ever-changing tax environment, also working within this ever-changing environment of COVID-19. What we do know, your resources are strained. We're going to talk.
Thank you very much.
We're going to talk again.
Absolutely. We've just anytime.
Gonna start the service. All right, that's exactly how we end Business AM this morning. But I'll be back with you at 10 AM for Metropole News. Good morning.